Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, July 31st, 2019. Happy Fed Day, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Today is the day that the market has likely been waiting for a while now. It is the FOMC meeting day 2 and the Fed interest rate decision that comes out later on this afternoon at 1 o'clock p.m. Central, 2 o'clock p.m. Eastern. That's going to be a very important level to watch. At that time, we're going to get another FOMC key level like we got on June 19th. You can see since that key level was developed there, price went bid initially, came back, it took it bid again, and then in July it's been mostly sideways as we anticipate the next potential rate cut later on this afternoon. Again, the markets has been holding within a range throughout the month. It's been holding in a range throughout the last week. And even today, heading into RTH, we have a very narrow 27% of average range day so far. Only 7 points of range from high to low in pre-market trading. We've been averaging 26.25 points over the last 10 sessions. So this market is clearly waiting for this event. It's been waiting all month with this range. It's been waiting over the last week, and now today, heading into RTH, very narrow and quiet trading behavior so far. So not a whole lot is expected today. Over the last couple of days, we have seen impulse moves early in the day, followed by compression type trading the rest of the session. Again, that could be seen as we see maybe one swing move here heading into the afternoon. But for the most part, likely to see this market remain mostly range bound as we head into the afternoon's release of that information. The market remains bullish, but we are forming this range at all-time highs. And again, we're going to continue to watch that 2960. Any failure there could open up quite a bit of selling pressure back down the way. 3000 even is going to be the bottom of this current key range here that's developing over the last 6 days. That's going to be an early indication of weakness back toward 2960s. So those are a couple of key levels here to watch as we head into the afternoon. Taking a look at the NQ, very similar price action today. 22% of ADR so far. That's less than the ES's 27%. It has 22.75 points of range in overnight trading. It's been averaging 104.25 points over the last 10 sessions. So this is very, very narrow. The last 5, 6, 7 days have been very narrow as well. And July has been mostly range bound to boot. So again, this market remains bullish, but we are now coming into a report here that could finally shake things out and create a bigger move to come. Any failure to hold 7,900 would open up near-term weakness, but it's really that 7740 level right here, that LVN. A failure to hold that zone could open up quite a bit more weakness back towards 7200 or even perhaps below. So again, if the market continues to hold above that zone, say we pull back and bounce, perhaps more upside is ahead. So right now, this market remains in a range ahead of the afternoon announcement. Taking a look now at crude oil, this one appears to have broken out to the upside. So if you notice right here, crude oil had developed a very narrow range on a 10-day basis. We finally got the upside break in the previous session. We had a pinching phase in the intraday time frame in both the 512 tick chart and the 1000 volume bar chart using the PivotBoss bands, and that pinching phase eventually resolved to the upside with a nice breakout. That led to a strong finish to the day, and now we are seeing another narrow day here. 38% of average, 62 ticks of range. It's been averaging $1.62 over the last 10 sessions, but that's inside this compression. So given the upside break here, we're likely to see a follow through to 61s and into 62. Remember, we've been talking about this expanding range here, and now we're seeing this break to the upside. In the last evening here, last afternoon, API reported a draw of 6 million barrels. Today we have crude oil inventories, and the expectation, the forecast, is for a draw of 1.8 million barrels. So again, if that is a larger than expected draw, we could continue higher. And any pullback, say as deep as 57s, could still be a buying opportunity for a continuation toward 61 to 62. So this appears to be breaking to the upside right now, and again, any pullback could still be a buying opportunity for a continuation play. Lastly, taking a look at gold futures. Gold futures has been very bullish overall. It finally got above the 1430 resistance level. That 1430 had been clear resistance over the last week. This week it gapped above it and held it. The previous session we got higher high and higher low. Today another inside day. 30% of ADR right now. It has a range of 5.4 points of overnight and pre-market trading. It's been averaging 19.2. So overall this thing is also trading very narrow, but so is the broader market. The Russell 400 rather, no, that's the S&P 400 is trading 20% of ADR. The Russell 2000 is trading 20% of ADR as well. So those are very, very narrow ranges as we head into the Fed later on this afternoon. So again, this thing continues to trend up. We're holding above 1440, which hasn't been easy for this market to do lately, but we are holding above it at the moment. Keep an eye on 1440. A failure to hold that level could rotate prices back toward 1420 to 1415 while still having an upward bias ahead. All right, that is it for now. We'll see how this plays out heading into the Fed later on this afternoon. Good luck, trade well, and I'll see you in the trading room. Take care.